Hello and welcome to The Property Show. I'm Andrew Montlake and with me is my co-host Louisa Fletcher.
We're here to talk about all things property. So whether you're staying put, buying, selling, renting or letting,
we'll be chatting through the latest news on the housing market and mortgages, as well as sharing our advice and expertise to help you get the best from your home. In today's show, Lou will be looking at why it's so hard to find anywhere to rent at the moment, apart from in London apparently, and we'll also be bringing us the latest news on the 2021 property boom.
Plus, Monty will be looking at why it can be more difficult to get a mortgage if you're self-employed and sharing his pick of the latest mortgages available. We're here to help you make money, save money, and most importantly of all, protect yourself, regardless of where you are on your home ownership journey.
We all set, Lou?
Let's do it, Mons.
Hello, we're back. It's number 6?
Yes, number 6.
It is. How's your... Now, literally, Lou, we haven't even conversed.
No.
Not a word in the last 2 weeks.
I feel abandoned.
Yeah, well, you've been... Yeah, well, every time I texted you or tried to get in contact with you, it's like, can I call you back? I'm too busy.
I know. I'm sorry.
Well, no, I know the feeling. It just goes on and on, this market, doesn't it?
It hasn't really stopped, has it? It hasn't really stopped. No.
But we've got an interesting show today.
I think it's fair to say there's a little bit of something for everyone today.
Good. So where do you want to start?
Well, I thought we might start with a bit of a pop quiz. Just for something a bit different. Just for something a bit different. Yeah. No. So there's no prizes, unfortunately.
Yeah. Is it 80s music?
It isn't, because that's my special subject. That's my special subject as well. So it's not that, no. But so there's method in my madness, in case people really think that we've lost the plot.
Right. Well, this is the property show.
Yeah.
Not the music show.
No. But just go with it. Okay?
All right, I'll play along. Go on.
Okay, so I'm going to name a few tracks and artists, and I'd like you to see if you can guess the year for me.
I'm rubbish at guessing the year.
Do you think you could do that?
Then.
Okay.
Go
on.
Okay,
so
everything else I'm good at, but the year, go on.
Okay, right. So concentrate now. Right.
All right.
Okay. Kaiser Chiefs. Yeah. Ruby. Good tune.
Great tune.
Take That. Patience.
Do you know what? I love that track as well.
That was kind of the big comeback single for them, wasn't it? I think. Another classic, Snow Patrol, Chasing Cars. Oh. And probably my favourite, Amy Winehouse, Rehab.
I know why that's your favourite.
Very funny.
What year? What? They were all in the same year?
What's the year? Yeah, all in the charts, in the same month, in the same year.
Right. It's definitely the 2000s.
Yeah, it is. Well done.
It's before 2010. So it's somewhere between, I would say, somewhere between 2005 to 2010.
Okay, warm.
Oh, God, I don't know.
Come on, have a guess.
2005.
Close but no cigar, my dear. It's 2007.
Oh, I knew it as well.
You see, you knew that.
Well, I obviously didn't. Otherwise, I'd have said
Well, I think you probably
2007. All right. So,
longer. Okay.
What the hell has that got to do with property?
Well, there were some pretty interesting stats released a few days ago.
Yeah.
And you know me and data.
I know you and data.
Yeah. And these are the residential transaction stats that are released from HMRC.
Yes.
And they reflect residential transactions completed in February.
I'm still waiting
this year.
for the link.
The link. Okay. Right. Hold on.
No pressure.
Right. So the big number of homes sold in February this year on an unadjusted basis for all you stat fans is a smidgen over 147,000 homes sold in the UK last month.
Wow.
Okay. So that's a 23% increase on completions when you compare it to January, so month on month, and a whopping 48.5% increase compared to February 2020.
Blimey.
Right? Which, if you
Blimey.
remember, February 2020, which feels like another lifetime ago, was pre-COVID, right? Because if you remember...
And that was busy then.
And that was busy because we were coming off the back of the bounce after the general election.
It's a Boris bounce.
The Boris bounce, and all the good stuff around that. So it was busy last February, busier this year, but it actually makes it the busiest February since February 2007.
Ah, there you go.
When there were 147,120 homes sold in February.
So that is in 2007. That was when we all thought it can't possibly go any higher.
Can't possibly go any higher.
Because I actually bought my house in 2007.
Did you?
And I thought, oh, am I being a bit crazy? Because I'm buying at the top of the market.
Yeah.
And literally, since then, the value has doubled.
Yeah.
I can't afford this house now. It's just ridiculous.
That's insane.
Yeah.
So, and just to sort of layer another little bit of context on, and to give people listening to this an idea of just how crazy these numbers are, the busiest month on record is March 2016, when there were just over 176,000 residential completions in 1 month, right? And if you remember that, Monty, that was because
I know
we had the cliff edge of the new tax on second homes and buy-to-let properties coming in on in the April.
Stuff.
Yeah. So
that's right.
And normally in like a normal market, we'd anticipate that there's around 98,000 homes sold in a month. So doesn't that give you? So this is why, everybody listening, this is why Monty and I sound a bit frazzled at the moment.
Actually, I was looking at the stats in Corico actually, and we have it's not the end of the month yet, it nearly is. But this is the most leads we've ever had in a month into the business. And our poor brokers and our poor customer services team, they're all a bit fragile,
and they're all a bit.
It's unbelievable.
Yeah, it's really nuts. So, it will be very, very interesting to see, because of course now we could have been looking at, had the stamp duty holiday scheme not been extended, I think it would have been very possible that we could have been looking at a replay of the sort of numbers we've just been talking about, in March 2016 next month. Yeah. But as it is, we've got another few months to go. So goodness only knows where we're going to be between now and the end of June.
Just before the end of June. Yeah. Then I'd expect to see that figure beaten. Then I think that could be the biggest figure on record.
Well, we've got it on record now. So I tell you what, yes, I'll take your bet. I think that, in fact, there's no bet to take, because I agree with you. I do think it's quite possible it could happen. So, yes. So for anybody trying to buy a house at the moment, and if you're thinking about, I'm looking for a house, I can't find anything, this is the reason why, folks, because everybody's buying houses right now.
Yeah. Yeah, it is really interesting. And the more, and we'll get onto mortgages like a bit later, but some of the rates out there are so cheap, and you can understand. You've got the stamp duty holiday, you've got 95% mortgages coming, you've got the press is in a bit of a media frenzy around property, etc. Loads of people just want to get on with their lives, and they want to buy, and their lifestyles are changing, and everything we've covered before. So it doesn't look like this is going to end anytime soon. And actually, I don't even think it's the stamp duty holiday now. No, I really don't. No. I think a lot of the clients we're seeing now coming to us are, the stamp duty is just, that's not the reason that they want to buy. They just want to buy. They want to get on with their lives.
So there you go. So I'll keep you updated. And once we, if we hit anywhere near that magical March 2016 figure, I will tell you.
Yeah. Wow. Unbelievable. So I like that. Good pop quiz.
Thank you. You do that again sometime.
Yeah. Well, we should do it every week. I'll have to quiz you next time.
Okay. All right. I'll take that.
So just a reminder, you're listening to the Property Show podcast with Louisa Fletcher and me, Andrew Montlake.
So, Mons, with all these people moving house at the moment, as we were just talking about. We were talking earlier before we started recording, actually. We were chatting, and you said that one group who are finding it really hard to get a mortgage at the moment are those who are self-employed or who own their own businesses.
Yeah.
So what's been going on with that? Is this something that's worse, perhaps, over the last 12 months due to COVID, or is this?
Yeah, it's something that has been worse. It's really interesting. So lenders have introduced new lending rules as a result of the coronavirus pandemic, obviously. And it's made it a lot harder for many self-employed people to get a mortgage, who are seen as riskier anyway due to the fluctuating levels of incomes, etc. And they're now subject to even greater scrutiny at the moment, because banks are keen on reducing risk in uncertain times.
Of course, which is responsible lending, let's face it.
It is responsible lending. And my problem is we all understand why lenders have reverted to cautious mode during this period. But self-employed people all seem to be lumped into one group. And there are many well-established businesses where, ironically, lenders would lend to their employees, but they won't lend to the business owners.
No, really? Wow.
And so not all businesses are in trouble.
No.
Just because they've taken advantage of, say, government support or grants or the CBIL loans, but they're lumping all the self-employed people into the same boat, even companies who have prospered during these times. And it's really hard for us to explain to, a business owner why they're having to jump through so many hoops and why, in some cases, lenders have been really reticent to lend to them. Now, I think this will start to change as we go through the next tax year, because we'll start to see people's tax returns and books, etc. And if there hasn't been a big drop, then I think lenders will start to be a bit more comfortable with it. But I can understand why a lot of self-employed people are really frustrated, because they feel they've missed out on, at the moment, really low rates. And a lot of them might miss out on the stamp duty holiday as well.
The point you raise about tax, Monty, I think that's really interesting and probably quite relevant for us to talk about, because this is the way that a lender assesses how much a self-employed person can borrow, right?
Yeah.
And so it's kind of, but why would that trip people up if they were self-employed and coming into sort of a mortgage application in the next few months? Why is the tax that they pay relevant to all of that?
So in terms of a lender, they're going to want to see your latest assessment. So they're going to want to see at least your last 2 years worth of accounts, or your SA 302s and your tax year overviews, which you can easily download from the HMRC website. If you've got your own login there, you can go in and get those two things, and that shows how much you've earned according to the revenue, what you've declared to them, and then importantly how much tax you've paid on that. So it basically tells the lender that your tax is all up to date. And that there are no big debts there. Now, lenders work in many, many different ways. And I would say, even though it's felt harder for self-employed people to get mortgages, the good news is that there are a lot of specialist lenders out there who have really come back to the fore during these periods and really understand self-employed. They understand self-employed people. They understand the difference between whether you're a company director, etc., or a sole trader, or a contractor, or you're a freelancer, and sort of merging between the between the two. So it's important to think to know that, first of all, just because you're self-employed, don't give up. Make sure you speak to a broker who's used to dealing with the self-employed, and there are options available, but it just feels like it's a bit harder at the moment. So different lenders work in different ways. Some lenders will just want to see your last 2 years tax returns and accounts, and they'll do an average on the last two. There are a couple of lenders who will go on just 1 year's accounts.
Wow, okay,
which is really good. they're still there. Some lenders will actually take into account retained profits. So there are a lot of businesses actually where the directors think, well, actually, I don't need to take all the money out of the business every time because I only need X amount to live. And the more I take out, the more tax I pay. So I'll just leave it in the business. And there are lenders who will take that into account as well. So there are loads of different options there, but it's really important you understand and get proper advice on which lender will look at your income in which way, so you know that you're going to the right lender to maximize your borrowing. And the problem that some people have had is some lenders have been really, really picky around if you've taken one of the bounce back loans.
Yes, I've heard this.
And for me, I'd almost go the other way. I'd almost say, look, there's this government support that's available. If you're a business, if you don't take the bounce back loan, you don't have to use it. But if you don't take it, then is that really prudent business sense? You should actually take it, keep it there if you need it. If you need it, it's there. If you don't need it, then you can pay it back in due course. So I'd almost argue it makes prudent sense for directors to take it.
Yeah, but so I guess my experience in all of this is that, you know, it's always about being on the front foot, obviously all the time about tax, clearly. But if what we're saying is that as a self-employed person or as a limited company director, if the amount of tax that you're paying and can therefore prove is directly related to the amount that you can perhaps borrow when you come to apply for a mortgage, it kind of feels to me that maybe as well as speaking to a mortgage broker, it's good to have a conversation with your accountant well ahead of time, so your accountant knows that at some point in the next year, 2 years, that you may be wanting to move home and therefore applying for a mortgage, or if you might be remortgaging, so that they can advise you correctly as to what you should and shouldn't be doing.
Yeah, it's really difficult, and a lot of people think they can have their cake and eat it, so they can keep their earnings low and therefore pay less tax, but then they wonder why they can't prove enough earnings to get a mortgage. And so it definitely makes sense to talk to an accountant and let them know what you're going to be doing way ahead of time, because there's nothing wrong. You're not legally doing anything wrong in terms of, you know, taking advantage of all the legal tax incentives that are out there. But it's definitely going to be worth actually making sure that you are earning enough income that can be proved in order to justify the amount of mortgage and borrowing you need. And if that means paying more tax, well, so what? That means paying more tax. If you're earning that money, then I'd argue you should be paying the tax anyway. So it is interesting, but definitely speak to a good tax advisor, accountant, and definitely a good broker as well. And then there are options there. So, for example, I've just arranged a mortgage for a celebrity who's both got their own business, various freelance contracts, and PAYE contracts from several different sources, both in the UK and abroad, including sort of speaking engagements and that type of thing. So it's you wouldn't be able to go to a lender directly and
that's
then
not a
understand
straightforward gig, is it?
To
put that one through.
You've got to know how to present it properly in a way that's honest, open, and the underwriters can look at it and go, okay, yeah, I really understand that. I get that. And that's the magic of a broker. That's what they give you. So for self-employed people at the moment, I would say definitely don't try and do it yourself. Speak to a broker.
So the advice is basically, if you're self-employed at the moment, don't expect that applying for a mortgage is going to be straightforward. It can be done, is what we're saying.
Yes, it can be done.
It can be done, but you do really need to be on the ball about your paperwork, about your tax situation, and speak to somebody that's used to dealing with self-employed mortgages so that you are absolutely getting the right advice depending on what your situation is.
Absolutely. Spot on, Lou.
Well, it's your advice, Monty. I just gift wrapped it.
Love that. Thank you very much. Well, you're listening to the dulcet tones of the Property Show with Monty and Lou. So, Lou, you picked up on a story this week about the rental market, didn't you?
I did. Yes, indeed. So for those of our listeners who are renters, and there are probably a lot of you who are listening to this who are renting, because there are over 5 million chimney pots, so to speak, in the private rental sector in the UK. So that's a lot of households that rent privately. And for those renters who are thinking about moving at the moment, it's fair to say in a lot of parts of the UK, there are far less properties around at the moment to choose from if you're moving into rented.
Yeah.
And it's normally pretty difficult for renters anyway, to be fair.
It's interesting, isn't it? Because we have I've actually read that in some places there are a lot of landlords selling up. So I don't know if that's we actually we haven't quite seen that. But is there any specific area where it's harder to rent than others generally? What do you think's behind it?
So I think there are kind of 3 main points to this, and it's kind of creating a perfect storm, if you will. So I'll answer the question you've given me last, if that's all right, because it kind of makes sense to cover another bit first. But
Yeah, go on.
the main thing is that COVID has meant that the vast majority of renters, if they're renting somewhere at the moment, are literally staying put. Like if they can hang on and stay where they are doing so. And also there was some emergency legislation that was introduced last year, which means that landlords now who would normally be able to give what's called a no-fault eviction or a Section 21 notice. So say, for example, a landlord wants to perhaps see if they can repossess the property, put it on the market, sell it, or perhaps, they think that if the current tenant isn't prepared to pay a bit more rent, they'll just kind of it does happen. They'll decide to, ask them to leave and then remarket the property at a higher rate. So, but what's happened is under the emergency legislation, landlords can't give 3 months notice anymore on a Section 21 eviction. They have to give 6 months notice, which is important for everybody. So if you're a tenant, that gives you more security of tenure, obviously. However, if you're a landlord, it does mean that you need to take that into account. So what's happening is, as a result of this, there are fewer properties available because stock, that is to say rental properties available, isn't turning over as quickly as it normally would do. Because people are just literally, if they're in a rental, they're hanging on, so that's one thing. Then we've got a situation where in some parts of the UK, properties that would normally be a holiday let, there's been this sort of exodus from London in certain places. Where people have gone, well, I don't want to do lockdown in London. If I've got to do lockdown for 12 months and I've got the ability to work from anywhere, providing it's got broadband, I'll bugger off to the Norfolk Broads or to Cornwall or to Devon. So again, there's been a chunk of stock that you would expect to see that now is not available because it's turned from being a holiday let into long-term rental. Right. So that reduces the amount of properties available. And then in the same kind of way, the family homes that are in those, coastal areas like Devon, Cornwall, Dorset, the typical holiday hotspots like, the Cotswolds, the New Forest, the beautiful bits of Norfolk and Suffolk. All of this stuff, all these places have seen a sort of temporary influx of residents who've kind of gone, do you know what? I'm just going to go and sit it out and do lockdown.
Absolutely. I know quite a few people who've done exactly that.
And then on top of all of that, you've got people who have taken advantage of the boom that we were talking about earlier and the demand for homes. They've sold a property and they've decided to move into a rental, so they're then chain free for when they do find something to buy. So all of these things, it's layer upon layer upon layer, and what it's created is a really difficult market for tenants at this point.
That's very interesting. Really interesting.
I don't recall a time, certainly within the last 10 years, where it's been this difficult. But here's the really weird thing. This is all outside of London.
I was going to say, is that, what's happening in the cities?
So
especially
in London, we're seeing rents softening. So it's cheaper to rent in London, probably cheaper than it's
Yeah.
been for years. Because, of course, so many people have done exactly the thing we were just talking about. So it's probably easier to find somewhere in London at the moment, and probably you'd get a really nice place a little bit cheaper at the moment because the demand isn't there. And it's typically that demand that pushes London into being one of the most difficult cities to rent,
Yeah.
if not in
Yeah.
the country, probably in Europe, I would have thought,
Yeah.
So it is all a bit topsy-turvy, I would say.
Do you think that it'll be interesting to see whether that changes in London again once people start to go back into offices? I mean, you've seen some, you saw the head of Goldman Sachs, for example, be really pretty robust about they want people to go back to the office, and some of the other big banks have actually already said, do you know what? Yeah, we're going to start opening the office, etc., etc. Do you think that will start to change as we get back to normality,
So I
or
think,
is this
you know,
a new world?
well, I think it's a bit of both because it all depends on the organisation you work for. And there are quite a few employers in London who have conversely said, well, everybody's worked so effectively from home, we now
Yeah,
want to move to a blended working model. So you can only,
yeah,
you only need to come in once or twice a week.
mm,
Some have said, well, with business rents in London the way they were, frankly, we've now proved that we don't need to be in London. So therefore, if we can get out of our lease, we will, and therefore people can work wherever they want, and we'll arrange for meeting facilities as and when we need them. So I think it's going to be quite a while. I would imagine that it's probably going to be another 12 months before things have settled
yeah,
into a stable picture. I think at the moment it's still all a little bit topsy-turvy. And it
okay,
will be possibly for a while, I think. So that said, I also think that where we've seen this kind of, the holiday spots becoming, more popular with people who were in London and have now moved out, I do think that perhaps that those are properties that may not end up going back into holiday lets. I think there will be this kind of, at least for another year or so, these people will be enjoying the fact that they're waking up to the country on their doorstep and probably not in
yeah.
too much of a rush to move back.
And I did see, we won't cover it now because I haven't, but I did see a headline around actually that the Chancellor might be looking at
Yes.
the tax
Yeah.
regime around holiday lets, but
Yeah.
I think that's maybe something for another day.
Maybe we should cover that next week, actually.
Yeah,
But
yeah,
yeah, so I think all of these things, it feels to me, if you are a renter at the moment and it's and it's proving challenging for you, there is a reason for it, and that's kind of what I'm trying to articulate.
yeah,
It's not just you. This is a thing. This is
yeah.
kind of, we're seeing it in a lot of places around the country.
So, for tenants wanting to move now, Lou, what advice would you offer?
I would say, much like we were chatting about earlier about getting your ducks in a row before you apply for a mortgage, if you're a renter, get your paperwork in order. So, you are going to have to go through some kind of tenant referencing check. So make sure your credit score is where it needs to be. If you're on the electoral roll, great. If you're not, register for it so that you can be easily verified. Your identity can be verified. Make sure that you've got your bank statements, you've got your pay slips so you can prove your income, because you'll need to do that for renting purposes. So, what I would suggest is get all of that paperwork together, get it ready so that when you find your next pad, then you've literally, you're good to go. You can start the process of applying, getting your tenant referencing checks done and everything else. Because let's face it, there are a lot of landlords who, sadly, their tenants, may have been, become unemployed as a sad consequence
Yeah,
of COVID,
yeah.
or they may have lost rental income, so the landlord may have lost rental income. So therefore, they are much more cautious now about referencing tenants. So again, if
I've
you
really
see,
noticed that.
yeah,
Yeah, we've got one of our people actually who's just moved down from Scotland to Southend to work for us, and she's having terrible trouble getting a rental property because a lot of them are They really are trying to cherry pick their tenants.
Yeah.
Really
Yeah.
heavily.
And that is kind of the point, Monty, is the fact that there is so much demand for rental properties. Landlords are, and to use your point exactly, cherry picking tenants. So it is all about putting your best foot forward, presenting the best argument that you are the best tenant for that property.
There you go. Good advice, as always.
We try.
This is the Property Show with Andrew Montlake and Louisa Fletcher.
Now then, Monty, just before we wrap up this episode, come on.
Yes.
Come on. What mortgages have caught your eye over the last few days?
Mortgages.
You didn't think you were going to get away with it, did you?
No. Well, I love mortgages. They're so interesting.
So do we know, very quickly, do we know anything more about our 5% deposit government-backed mortgages that are due to be released next week? Do we know anything more on those yet?
No.
Okay.
And yes.
Okay.
I'll explain.
Right.
So, no, we don't really, because the government-backed ones haven't come out yet. So we don't really know.
They're teasing us.
They're teasing us at the moment. We don't really know where they're going to be priced. What's really interesting to me, and probably to a lot of people,
actually, and a lot of other people,
who want 5% deposit mortgages, is that there are a few lenders who have, on the back of the news that 95% government-backed loans are coming out, have already come out with their own version. So these aren't government-backed. So you've got Accord, Bank of Ireland, Skipton, amongst a couple of others, who've all come out with 5-year fixed 95% mortgages.
Okay.
So the cheapest of which is Accord at 3.99%.
Okay.
Fixed for 5 years, £995 fee. Do you know what? That's not too bad. It feels expensive, but it's actually not.
But it's a 5% deposit.
And it's a 5% deposit. Now, the rub is that it's first-time buyers only.
Okay.
It's not available on new build or flats.
Okay.
Just houses. And they're very strict, 4.49 times your income.
Okay.
And the others have quite similar criteria. A couple will lend on flats and houses, but that's sort of where we're at. So we're around the 4% level at the moment. Whether the government schemes will be cheaper or not remains to be seen. And remember that there is a cost to lenders for taking that government guarantee, which ain't that cheap.
Right.
So that's where we are at the top
watch
end.
this space is what you're telling me.
Yeah, absolutely. And when we come back in a couple of weeks' time, hopefully we should have the first of the government schemes.
Yeah.
But in the 90% rates have come down quite a bit. So you've now got Barclays, for example, 2-year fix under 3% now.
Wow.
So 2.98% 2-year fix. Or Clydesdale have got a 3.28% 5-year fix. So that's at 90%. Now, at the other end of the scale, where the real cheapest chips rates are, if you've got 40% deposit, Platform have a 1.06% 2-year fix.
Wow. So if you were remortgaging, say you'd been in your house for a long time and you had a lot of capital, that sounds like that could be something. Yeah,
of course, it's only for 2 years. If you wanted 5 years, and I still think this is where the value is, you still got your mates Nationwide at 1.24%, 5-year fix. I mean, that's just
they're good. They're a good bunch, I know I say it every time, but they're a good bunch.
Have you got shares in Nationwide?
No, but I had my first mortgage with them.
So
there's a loyalty. Other mortgages available. I'm not paid any commission for saying that.
Well, I was beginning to wonder.
Yeah.
Do you know, I had my first mortgage with the Portman Building Society.
Well, that's what I was saying. So that was the bit I was going to say, and then I was going to be like, I'm geeking out. So yes, so my first mortgage was with the Portman, and then of course they were purchased by the Nationwide. So yes,
yeah, that's right. Yeah,
showing our age now, Monts.
No, Portman Building Society. And do you know what? I had a Norwich Union top up. So in those days, and I think they should bring these back, by the way. So 75% with Portman and a 20% Norwich Union top up. and the Portman rate was about 3.5%, 4%, and the Norwich Union top-up rate was 13.5%.
Whoa.
But the blended rate made it affordable, you see. Anyway, there you go.
Let's not talk about blended rates, dear.
We won't talk about blended
new
rates.
level. That's a new
That's
level.
a new level. And we're out of time.
on that bombshell.
And on that bombshell, it's gone. We've lost the audience. They all went to blended rates. We were geeking out there.
Oh dear.
Thank you, Lou. It's been just marvellous as always.
Oh,
and thank you for the
all
pop
mine.
quiz.
Oh, you're welcome. I'll come up.
I'm going to have one for you next time.
Right, I'm looking forward to that. Brilliant.
And thank you all for listening in again. If you like what you hear, please give us a rating, and you can leave us a review in your podcast app, and we'd be very grateful if you would.
Yes, we would indeed. And don't forget, we're here to help with your property problems and mortgage dilemmas. So if you'd like our advice, and we promise not to talk about blended mortgage rates, why not drop us an email to hello@theproperty-show.co.uk.
And if you want the very latest on the property market from the two of us, please give us a follow on social media. You'll find us on Twitter @ThePropertyShowPod.
Thanks so much for joining us. See you next time.